Have you ever wondered about this? Markets go up, markets go down, there's chaos and uncertainty everywhere, and yet some people just seem to keep winning. Well, I can tell you it's not some secret inside information, and it's definitely not just luck. It's a completely different approach, a fundamental shift in mindset that, honestly, changes the entire game. So let's get into what that is. And right here, this is it. This is the core difference in one simple image. A beginner looks at a stock and asks, is this thing going up? Can I make a quick buck? But a wealthy investor, they ask a totally different question. They ask, is this a great business? Is it going to be around and growing in 5, 10, maybe even 20 years from now? That one little shift in perspective, well, that's the foundation for everything else we're about to talk about. And that leads us straight to our first big principle, ownership over price. It's all about making that critical mental leap from just watching a price ticker to actually thinking like a business owner. You see, when you start thinking like an owner, it forces you to look right past all that daily market noise. Instead of reacting to every little price jump or dip, your focus totally shifts to the long-term health, the real value of the company itself. You're not just buying a ticker symbol anymore. You're buying a small piece of an actual, living, breathing business. And that owner's mindset, well, it naturally leads right into our second principle, the power of patience. Because when you're focused on the business, not just the stock price, your whole relationship with time completely changes. Just look at the difference here. It's night and day, right? So many beginners are hunting for results in just days or weeks. But experienced investors, they're patient. They think in years, even decades. Why? Because they get that while markets are a roller coaster in the short term, strong, well-run companies tend to grow over the long term. Patience just gives that growth the space it needs to actually happen. And all that patience, well, that's what unlocks one of the most powerful forces in all of finance, compounding. It's a pretty simple idea, really. It just means that your returns start earning their own returns. So imagine you earn $100. Next year, you're not just earning on your original money, you're also earning on that extra 100. It sounds small at first, but over time, wow, it becomes the real engine of creating wealth. And this is what it looks like in action. This is exactly why starting early and just staying in the game is so important. I mean, look at the growth. It starts off slow, almost boring. You might not even notice it. But then look what happens after 15 years, and especially after 30 years. That curve just goes almost vertical. That's the magic of compounding kicking into high gear. But here's the catch. To let patience and compounding do their amazing work, you absolutely need our third principle, discipline over emotion. The market is just a giant emotional roller coaster, you know? It's driven by fear and greed, and mastering your own emotions on that ride, well, that's a massive advantage. This is such a critical point. Think about it. When the market drops and all the headlines are screaming sell, what do most people do? They panic. But disciplined investors, they see something totally different. They see opportunity. So here's how they're thinking about it. A big market downturn creates widespread fear, right? That fear causes people to sell perfectly good companies for way less than they're actually worth. And that, right there, that's the opportunity. It's a chance to buy great businesses on sale. But here's the real secret. Wealthy investors don't just rely on some kind of superhuman willpower to stay calm. Nope. They build systems and rules to guide their decisions, which basically takes emotion right out of the equation. So, what does a system even look like? Well, think of it like a machine you build. You set the rules ahead of time. Things like investing a consistent amount on a regular schedule, spreading your money out across different companies and industries, and always looking at the risk before you even dream about the reward. This whole process creates a solid, repeatable plan that just keeps running calmly no matter how chaotic the market gets. And maybe the most important rule in that system is accepting this fundamental truth. Trying to perfectly time the market's highs and lows, jumping in and out at just the right second, it's a fool's errand. Seriously, even the top pros can't do it consistently. The real power isn't in perfect timing, it's in being consistent over time. Okay, so let's bring all these pieces together. We've seen that the path to building wealth in the market isn't about secret tricks or hot tips. It's really about adopting a specific, disciplined way of thinking. So here it is, the whole playbook. It's about seeing stocks as real ownership, thinking in decades, not days, putting that incredible force of compounding to work for you, staying disciplined when everyone else is emotional, and of course, building a system and actually sticking to it. And a big one, never stop learning. You can see how each of these ideas just builds on the others to create one powerful, cohesive strategy. And this might be the most important takeaway of this whole explainer. You don't need a boatload of money to start using these exact same principles. The real barrier isn't what's in your bank account, it's what's in your head. It's your mindset and your habits. So just remember, building real wealth, it's not about one big lucky jackpot. It's the result of small, intelligent choices that you make consistently over a long period of time. The sooner you start thinking like a long-term owner instead of a short-term trader, the sooner you start building your own financial future.